Today, I want to talk to you about something that's on the minds of many smart investors: how to make money through dividend stocks. But don't worry, I'm gonna keep it simple. Whether you're a seasoned investor or a curious beginner, this is the ultimate guide to unlocking the potential of dividend stocks, helping you pave your path to a more secure financial future. Don't miss out on the chance to learn how to turn a smart investment strategy into a steady income stream. Join me and let's dive into the world of 10 dividend stocks that pay me $500+ per month. Number 1. Viatris, the reliable pharmaceutical player. Let's kick things off with Viatris, a pharmaceutical company. Now, they might not be the most glamorous stock, but they're a stable long-term investment. Viatris came into the scene in 2020, and it's a result of a merger between Pfizer's Upjohn segment and Mylan. They're working on streamlining their operations and reducing debt to focus on growth. Although their revenue hasn't been skyrocketing, they're still a great choice for dividend investors. Why? Because they're expected to generate a hefty $2.5 billion in free cash flow for 2023. And guess what? That's way more than what they spend on dividends, which is less than $600 million per year. Plus, the stock is a bargain, trading at less than 7 times earnings. It offers a solid 4.8% yield, which is 3 times the average of the S&P 500. To get $500 in quarterly dividends, you'd need to invest around $41,670. They pay out in March, June, September, and December. Number 2. Verizon Communications, the telecom giant. Next up, we've got Verizon, a telecom giant. They're known for their high 7.8% yield. Why is it so high? Well, some investors get spooked by rising interest rates and concerns about the economy slowing down. There's also the issue of potential costs related to lead-covered cables. But that shouldn't lead to a panic. Verizon's financials are strong, and they have a comfortable payout ratio of about 50%. In fact, they've raised their dividend for 17 years in a row, so don't stress too much. The company is in good shape. To get $500 in quarterly dividends from Verizon, you'd need to invest around $25,600. They pay out in February, May, August, and November. Number 3. Altria, the tobacco giant with a twist. Now let's talk about Altria, a tobacco company. They're not exactly in a high-growth industry, but they're trying to diversify their offerings. They've got products like heated tobacco and e-vapor to cater to changing consumer preferences. Sure, their overall sales were down slightly, but their adjusted earnings per share actually went up by 4%. Altria's cash flow is impressive, supporting dividends of $6.6 billion. And guess what? They recently hiked their dividend by 4.3%, marking their 58th consecutive year of increasing dividends. To get $500 in quarterly dividends from Altria, you'd need to invest around $22,730. They pay out in January, April, July, and October. Number 4. Procter & Gamble, the consumer goods giant. Now let's talk about Procter & Gamble, or P&G for short. They're a behemoth in the consumer goods industry, and they offer a modest 2.52% dividend yield. But don't be fooled by the low yield. It's still higher than the S&P 500 average. P&G is a dividend king, with 67 years of dividend increases under its belt. They sell everyday essentials, so they're not greatly affected by economic ups and downs. Bounty, Charmin, Head & Shoulders, and more. These are just a few of their brands. They're diversified globally and across various product categories. They pay out dividends regularly, and this stock is a solid long-term choice. Number 5. JPMorgan Chase, the banking titan. Switching gears to JPMorgan Chase, one of the biggest banks in the US, their dividend yield is at 2.89%, offering you about $4.20 per share annually. They've got a rock-solid balance sheet with a whopping $495 billion in cash and cash equivalents. The rising interest rate environment is actually working in their favor, boosting their net interest income. The Federal Reserve plans to keep rates steady for a while, which is great news for the bank. Smaller banks have faced some challenges, but JPMorgan Chase is a fortress of stability. Their dividends are a testament to their strength, and they're a key contributor to my passive income. Hey, if you're finding these dividend stocks intriguing, don't miss out on the rest of our lineup. The next 5 stocks are just as exciting, and they could be the key to boosting your passive income. So hit that subscribe button and turn on notifications, because you won't want to miss the second half of our breakdown of dividend stocks that could earn you $500 or more every month. Stay tuned for more valuable insights coming your way. Number 6. Home Depot, the home improvement giant. Now, let's talk about Home Depot. You might know them for their DIY projects, but they're also known for their 8.36% dividend yield, which means you get about X dollars per share each year. They're the largest home improvement retailer in the US, with a vast network of stores. The revenue comes from a diverse range of products, and they cater to both professionals and DIY customers. They've got a strong gross margin and cash flows. Home Depot is a company you can count on, even when times are tough. Their reliable business model makes them a stable choice for your portfolio. Number 7. Coca-Cola, the beverage behemoth. Who doesn't know Coca-Cola? They're not just about fizzy drinks. They own brands like Vitamin Water, Powerade, and more. Their dividend yield stands at 3.26%, so you'll get around $1.84 per share annually. Coca-Cola has an incredibly strong brand, steady profit margins, and pricing power. In an inflationary environment, they can adjust prices without scaring off customers. So they've got the stability you'd want in a dividend stock. They're a staple in the beverage industry and a reliable choice for dividend investors. Number 8. Abbvie, the pharmaceutical challenger. Abbvie is a biopharmaceutical company that's making waves. They offer a 3.85% dividend yield, which equals about $5.92 per share annually. While they lost a patent for their best-selling drug Humira, they have other winners in their portfolio. Drugs like Skyrizi and Rinvoq are performing well. Abbvie's cash flow is robust, and they're handling challenges better than expected. They're a good choice for diversifying your holdings. Keep an eye on them. They might surprise you. Number 9. Vanguard S&P 500 ETF, VOO. Diversify with an index fund. Consider investing in the Vanguard S&P 500 ETF VOO. It doesn't pay the highest dividend, but it's a great way to diversify across the entire S&P 500. It offers around a 1.5 to 1.6% dividend yield, giving you about $6.30 per share. Even if you're not into individual stocks, ETFs like VOO can offer you a slice of the dividend pie. Number 10. Johnson & Johnson, the household necessity. Lastly, let's talk about Johnson & Johnson. They've got a 3% dividend yield, giving you about $4.76 per share annually. They sell staples like Tylenol, Band-Aid, and Listerine. Their dividend streak of 61 consecutive years shows their commitment to shareholders. With a solid cash position, they're a comforting presence in any investor's portfolio. They're a company you can rely on, even during economic downturns. Wrapping up. Now, to put this all into perspective, if you're looking to get $500 a month in dividend, you'd need a substantial amount invested. On average, a 4% dividend yield would mean you'd need around $200,000 invested. It might seem like a lot, but building up to this level takes time and consistent investment. And trust me, when those dividends start rolling in, it's a fantastic feeling. Remember, it takes patience, but it's totally worth it when you start seeing those dividends making their way into your pocket. So keep at it, stay consistent, and you'll see the benefits.